Good morning, ladies and gentlemen, and welcome to today's webinar, Key Aspects of Economic Substance Regulations, which is organized by Dubai Chamber in collaboration with Al-Tamimi and Company. This webinar will examine the latest developments and provide guidance with respect to the economic substance regime and compliance requirements. We are glad to have with us today a group of leading experts from Al-Tamimi and Company. Our first facilitator is Mr. Shiraz Khan, Head of Taxation. Shiraz is a UK qualified lawyer with more than 18 years of international tax experience. He specializes in advising on international tax structuring, tax aspects of cross-border, merger and acquisition, private equity, structured finance, Islamic finance, and real estate transactions. We are also glad to have with us Ms. Nof Al-Khafaji, Senior Associate, Corporate Structuring. Nof is a Senior Associate in the Corporate Structuring Department and has over 7 years of corporate structuring experience, working on a variety of corporate and advisory matters for both national and multinational clients, with particular expertise in dealing with the Dubai International Financial Center. Last but not least, we have with us Ms. Janet Gui, Senior Associate, Tax. Janet is a UK and Malaysian qualified lawyer. She specializes in advising on VAT and corporate tax aspects in a broad range of industry sectors, including finance, luxury retail, real estate and telecommunications, international tax structuring, and tax aspects of cross-border merger and acquisition, restructuring, and private equity transactions. Also, we were supposed to have with us today Ms. Isabella Zatkowska. However, due to unforeseen reason, she won't be able to be with us today. Last but not least, ladies and gentlemen, without taking any further time, may I request Mr. Shiraz to deliver his presentation. Thank you.
Thank you, Fatima. If you can move to the next slide, please. Just to set the agenda for today, we're going to be talking about the economic substance regulations. As many of you know, the economic substance regulations were issued in 2019, around June time, and then subsequently they were reissued, new regulations were issued in August 2020. Now these new regulations replace the old regulations. So the purpose of today's session was literally to not repeat whatever is in the regulations, but just to give you the key highlights of what the regulations are about. So firstly, we'll be starting off with why the economic substance regime was introduced in the UAE. Then we'll be moving on to discuss some of the latest developments, what the relevant legislation is with all the changes which have happened recently. Then we'll be moving on to in what circumstances do the economic substance regulations apply, who enforces and administers the regulations and the regime. Before we move on to what are the requirements as a result of the regulations, if they apply to you, what do you have to do? What are the compliance obligations, in short? Before we conclude with what would be the consequences if you fail to meet the requirements of the regulations. So just to begin with, I think it's important to understand more about the economic substance regime, why it exists. Many people ask the question, what's the purpose and why have they been brought in? Well, in terms of the history of these regulations, I think it can really be traced back to the last recession in 2008, 2009. So in 2008, 2009, many of you will be familiar, there was a global recession, which happened across the world. Many governments across the world went into budget deficit. Now, tax is one of the key revenue generators for most countries that don't have the benefit of natural resources. So these countries generally rely on taxes to fund their public expenditure, roads, hospitals, education, schools, all of this is funded generally by taxes. So when these countries were in budget deficit, what did they turn to generate additional revenue? Tax. Now, these countries were generally had a concern that many international companies across the world, with the advent of globalization, were essentially operating in multiple countries, moving money from high tax jurisdictions into low tax jurisdictions, and therefore paying less tax as a result. And there was generally a mismatch in the sense that the profits are being booked in one country where there's little or no taxes, and the real economic activities occurring in a different country, which has high taxes. So there's this mismatch there. These countries were also concerned that at that time, the global rules, international tax rules were outdated, and they weren't sufficient to protect the tax revenue of different countries. So with this concern, the G20 countries, which include Saudi Arabia, approached the OECD, Organization of Economic Cooperation and Development, which is headquartered in France, and they deal with tax reform globally. So the G20 approached the OECD and presented this concern to them and said, how could we develop coordinated action whereby we address these practices whereby multinational companies are moving taxes, moving profits from high tax countries into low tax countries and paying less or no tax. So as a result of this, the OECD engaged in a project which subsequently became known as the BEPS project, Base Erosion and Profit Shifting. Now, under this BEPS project, the OECD developed 15 action points which countries should implement in their local laws in order to address this base erosion and profit shifting. So this is some of the history about the project. Now, one of the action points in this project was Action 5, which is relevant, and this deals with harmful tax practices. And generally speaking, harmful tax practices where countries have favorable tax regimes which are designed to attract businesses with an attractive tax environment. So this was one of the focuses of Action Point 5. Now the UAE in particular became a BEPS inclusive member, of the BEPS inclusive framework, which essentially meant that the UAE committed to implement 4 minimum standards. So 4 of these action points, which were introduced by the OECD, the UAE committed to implement them, along with the other members of the BEPS inclusive framework. And as of now, I believe there's over 150 members. So this is some of the background in terms of the OECD. Then what happened in 2017, December 2017, if I remember rightly, the EU was actually looking at countries with low taxes, no taxes, and how they're doing business with the EU. And the Code of Conduct Group also assessed these jurisdictions for good tax governance, which essentially involved looking at tax transparency, so looking at the international standards for the exchange of tax information, looking at, for example, also fair tax competition. So do you have essentially, have you got rules there which encourage artificial structures where you move profits into the country with little or no substance? And finally, essentially the EU criteria looked at whether you've implemented the BEPS standards, which the UAE had already done. So initially in December 2017, the EU actually put UAE on the blacklist. And then in January 2018, the UAE was removed from the blacklist because the UAE made a commitment because it had very limited taxes. It would introduce substance regulations by the end of 2018. Unfortunately, with the small time frame, lots of work had to be done, so it wasn't possible to achieve that. So therefore, the EU they blacklisted the UAE again around March 2019. So after that, in June 2020, the UAE actually introduced substance regulations, and then later they were removed from the blacklist. So that's some of the background in terms of why the substance regulations were introduced and why they're important. Now I'll hand you over to Nof to talk you through the next section.
Hi, everyone. So now we're going to just do a brief overview of the applicable legislation. There are 2 pieces of legislation that cover the topic of economic substance. And the first one that was introduced in August 2020, which revoked the previous resolution, which was issued in 2019. So this is the resolution number 57 of 2020, and it concerns the economic substance regulations. And in addition to that, there was the decision of number 100 of 2020 that went alongside the regulations and concentrates on the implementation of the provisions within the regulations and provides further definitions. So these two are the key pieces of legislation that covers the topic of economic substance in the UAE. Moving on to the next slide. So the Ministry of Finance also has published various other guidance documents to support the legislation. And they do have a few useful documents on their website that we encourage all businesses to go and have a look at. The key documents that they have on there, one is a flow chart, which is really useful, and it helps you follow various scenarios to enable you to determine whether or not your business falls within the economic substance regime. And also, in addition to that, they have a summary of all the relevant activities, and I will be discussing in further slides what are the relevant activities. But the summary that's published on the Ministry of Finance website does provide detailed definition of each relevant activity. And not only that, it also provides an example of how you can interpret your business to just help you understand, you know, what is this definition and how does it apply to my business. So it's really useful. And probably the most useful of all is the question and answers. So the Ministry of Finance has published a long list of questions and have provided answers to those questions. So it's really useful to go on there and just have a look, and perhaps most of your questions that you may have in your mind are answered there. So as you can see from this timeline, as soon as the economic substance was introduced in the UAE, there has been quite a few developments along the process. So I'll just walk you through the timeline of developments just so that you understand what was it that was introduced and where are we today. So back in April 2019, it was the issuance of the Cabinet Resolution number 31 of 2019. And this was the first piece of legislation that was introduced. And following from that, in January, so early 2020, January to February, the Ministry of Finance issued further guidance notes, just like I discussed, the flow charts and the definition of the relevant activities. Then in April, there was further guidance issued because, along the way there was many questions that the ministry was receiving, and further guidance was issued in relation to the relevant activities, which is really useful. Then bringing us to 2020, quarter one, quarter two, there was announcements of notification submissions. And I will be going through, and also Janet will be going through the filing requirements and what we need to do in relation to the notification. But the notification submission deadlines was available to the public, and all businesses needed to adhere to those. And obviously, given the current situation, the Ministry of Finance also introduced some notifications in relation to the impact of COVID-19 and how this will affect economic substance. So back in May 2020, the Ministry of Finance issued some advisory notifications, extending of deadlines and things like that in relation to COVID-19. Then in August 2020, the legislation was revoked, and a new piece of legislation was issued that covered economic substance. And this revoked the previous one. If we would go back to the beginning of the timeline, the ministry, the Cabinet Resolution of number 31 of 2019. Then in early January 2021 of this year, the Ministry of Finance issued an extension to the filing deadline. So the deadline for submission of the notification and also the report was extended to 31st of January of this year. So here you will see the evolution and the timeline of developments to date. So who enforces and administers the economic substance regulations? Here you will see two different authorities. First, you have the Regulatory Authority. This is the authority that regulates the company, the business. So this will be the licensing authority. And as you may be aware, back in June of 2020, there was a notification requirement for all businesses that are defined as a licensee under the regulations, and I will come on to the definition in a few slides. We're required to submit a notification to their regulatory authority. This was perhaps through a portal, through the regulatory authority, and the regulatory authority are responsible then for reviewing the contents of the notification and assessing the sufficiency of information that was submitted. And then the regulatory authority would report to the National Assessing Authority. The National Assessing Authority is practically the federal tax authority, and they're responsible then for assessing and determining whether a licensee has met or has economic substance in the UAE and has met the economic substance test. So those are the key authorities when it comes to the enforcement of these regulations. So here's an overview of some regulatory authorities. You will see there's federal authorities and also various free zone regulatory authorities. The federal authorities, and I won't go through them all, but I'll just go through the federal authorities. So you have the Ministry of Economy, the Central Bank, the Insurance Authority, and Security and Commodities Authority. So each authority will take care of the specific relevant activity. So, for example, the banking relevant activity, the federal authority, the central bank will be the responsible regulatory authority for that. And similarly to the free zone, so depending on where the licensee is incorporated, the regulatory authority would be that licensing authority. So here you will see the various free zones in Dubai and also the various free zones in Abu Dhabi. Then we have free zones in Sharjah that are the regulatory authorities, to familiarize yourself, and also Ras Al Khaimah and other free zones throughout the UAE. So you have Ajman, Al Quwain, and Fujairah. So who does the ESR, the economic substance regulations, apply to? So under the regulations, all licensees are subject to the economic substance regulations. And a licensee is defined as a juridical person incorporated inside or outside the UAE, or an unincorporated partnership that is registered in the UAE, including the free zone, and this includes also the DIFC or ADGM, a financial free zone, and it carries out a relevant activity in the UAE. There are exemptions, so there are what's known as an exempted licensee. And here you will see there are various exempted licensees, which I'll go through. So an investment fund is considered an exempted licensee. An entity that is tax resident in another jurisdiction other than the UAE. So for example, a branch that is tax resident in another jurisdiction outside the UAE would be an exempted licensee. An entity that is wholly owned by UAE residents and it's not part of a multinational group and it only carries out business in the UAE would be considered an exempted licensee. A branch of foreign entity that its income is subject to tax outside the UAE, and any other licensee or determined or pursuant to the Ministry of Finance decision or discretion. So an exempted licensee does not need to demonstrate economic substance in the UAE, but so that doesn't mean that it is exempt from all filings. It still must submit a notification to the Ministry of Finance to say that it is an exempted licensee, and it must provide the authority with supporting documents to evidence that it is an exempted licensee. For example, if a branch of a foreign entity, if its income is subject to tax outside the UAE, it would need to provide documentation to support this, and this would need to be submitted to the Ministry of Finance. But it would not need to go further than that. It would just need to say that it is an exempted licensee, and therefore it doesn't need to meet the economic substance test, which then means it doesn't need to file an economic substance report. This is just an overview of the relevant activities. You have banking, shipping, holding company, insurance, headquarters, intellectual property, investment fund management, financing or leasing, and distribution and service center. So we get asked this question quite a lot, and when determining if a entity is carrying out a relevant activity, it goes beyond what the entity is licensed to do. So an entity may have activity on its license, but that doesn't necessarily correlate to the relevant activity per the economic substance regulations. For example, a holding company, just because an entity is licensed as a holding company doesn't necessarily mean it falls under the definition of a holding company within the relevant activities. And Janet will go through this with you later, but a holding company must only receive income by way of holding shares in other companies, so only through dividends. And if it does any other commercial activity, it will not be considered a holding company as per the economic substance definition. So it really goes beyond the licensed activity and more so on the activity in which the income is generated for. So here's an overview of the most frequent or the most common relevant activities that we see amongst businesses within the UAE. So as I mentioned, the holding company, it's only applicable to companies that hold or acquire assets in, or e.g. shares in other entities, and only earns income from dividends or capital gains and does not carry out any other commercial activity. The headquarter business is provision of any of the following: provision of senior management, assumption or control of material risks for the activities or assets of foreign connected persons, or provision of substantial advice in connection with the above assumptions. A service center business is any services provided to a foreign connected person. And the term foreign connected person is defined under the regulations and also discussed within the guidance documents provided by the Ministry of Finance. But the service center business is key because it's not a licensed activity. In order to determine if this is relevant to you, it's worth going through the financial statements and seeing if any income is received from a foreign connected person in exchange for any service. This may be recorded as a management fee, a service fee, or any type of service that is given to a foreign connected party in exchange for income. And then you have the distribution center, which is defined as the purchase of parts or materials for goods or finished goods from a foreign connected party and then resale of such goods to the end consumer. So it has to be purchased from a foreign connected party, and that would capture a business under the distribution center relevant activity. And then I'll pass this over to Janet to go through the key requirements.
Thank you, Nav. So you've just heard from Nav on the applicability of the economic substance regime and who does it actually apply to, and an overview of what the relevant activities are. So once you've actually determined that that applies to you as a business, it's also important to know what are the key requirements under this economic substance regime. And there are three main obligations under this regime, and the obligations that would apply to you would depend. I'll take you through it shortly. So the first obligation is that once you determine that, okay, you're a licensee or an exempted licensee, and you carry out a relevant activity, then you would need to submit your economic substance regulation notification to the regulatory authority on that particular relevant activity that you carry out. Now, in practice, as many of you know, if you've already submitted your notifications, this will be done via the MOF portal, the Ministry of Finance portal. And under the regulations, it says that you need to actually submit this within 6 months from the end of your financial year. Now, the last deadline for this was, it fell on 31st December 2020, which has now been extended recently to 31st January 2021. And the contents of the notification would also include, the relevant activity that's being carried out during the financial year, whether you've actually generated income during the relevant financial year, and also details on the financial year end. And as you heard from Nov earlier, if you're an exempted licensee, then you would actually need to provide proof and supporting documents that you actually fall within this category. So this, if you already applied for it, you would know that they'll ask you questions like, if you're a branch of a foreign entity, for example, and you fall within the exempted licensee category, then you need to provide the tax identification number of that foreign entity, your foreign parent entity, as well as also supporting documents such as a tax assessment showing that tax was already paid by your foreign parent company. Okay, and for the next two obligations, which is basically you need to demonstrate economic substance. You need to demonstrate economic substance as well as submitting the report demonstrating that you've actually satisfied the substance test. Now, these two obligations would apply if you earn income from the relevant activity, okay? And those two obligations does not apply if you're an exempted licensee. So you do not need to demonstrate substance if you're an exempted licensee. Now, in satisfying the economic substance test, there are a few requirements to show that, okay, you actually fulfill this substance test. Now, you heard from Shiraz earlier, the whole point of this regime was actually to show that, you actually do have economic substance on the ground. You're not just a company that exists on paper. This whole regime was actually designed to say, hey, look, we want to know that you as a business, you actually have real people on the ground. You're actually conducting, actual real activities. You're being directed and managed here in the UAE. Okay, so the test requires you to conduct core income generating activity, and this is specified under the legislation for each relevant activity. So let's say, for example, if you're conducting a banking activity, then there are these 4 or 5 requirements or activities that you would actually need to carry out in order to demonstrate economic substance. The second one is also quite important. You need to be directed and managed in the UAE. So this basically means that you need to hold board meetings in the UAE and satisfy the required quorum for having these meetings, maintain your board meetings in the UAE. Now, there is no requirement for the directors to actually hold the UAE residency, but there is a requirement for these board meetings to actually be physically held in the UAE. And if the governing, regulation for your license requires you to actually have, it's more onerous than your constitutional documents, then the legislation would apply. Okay, so it is important as well, looking forward for the most recent financial year. As you know, COVID-19 has disrupted a lot of businesses, and directors were unable to travel to the UAE. It is also important to keep a record of this and actually assess, how COVID-19 has impacted your business operations in demonstrating this economic substance. Also, the third one is to show adequate level of relevant activity in the UAE. So in terms of this, you need to show that you actually have adequate full-time employees in the UAE. You have sufficient operating expenditure in terms of outsourcing. You also have adequate physical assets in the UAE. Now, the legislation does not prescribe what is adequate. And this is for businesses to actually determine and show that they actually have this sufficient level of activity here in the UAE. Now, if you're a holding company business, then you would have a reduced economic substance requirements, and I'll touch on this later in the slides. And if you're a high-risk IP business, then you'll be subject to more stringent substance requirements, and you'll be automatically presumed to have not complied unless you prove otherwise. Now, moving on, the third obligation is to actually submit a report showing that you've demonstrated this economic substance. Now, this is meant to be submitted within 12 months of the end of your financial year. And if you already conducted relevant activity and generated income from that relevant activity, you would have recently also submitted this report for your 2019 financial year. Now, the contents of the report would include, setting out the type of relevant activity that was conducted, the amount, relevant income. So it goes into really detail. There's a lot of detail there. And the whole point of this report is to show that, okay, hey, look, I have sufficient activity on the ground to conduct this relevant activity. And you're going to show that you have this number of full-time employees with the relevant qualifications for your relevant activity. I'm actually conducting this core income generating activities that was prescribed under the legislation. It also includes a declaration on whether you satisfy this economic substance test. In addition to that as well, it's also interesting to note that they also asked for information relating to your parent company, your ultimate parent company, as well as ultimate beneficial owners. As for high-risk IP businesses, which I'll touch on in the later slide, you will also be requested to provide additional information, to actually prove or disprove the presumption of non-compliance with the economic substance test. So moving on. So as a holding company, as Nov has mentioned earlier, if you conduct a holding company business, which is basically you only hold equity and you derive, you only earn income from holding shares in companies, then you will fall within the holding company business. And if that's the case, then you only be subject to light substance requirements. And what are these? So you only need to comply with your existing reporting and compliance requirements with your regulatory authority. And you need to show that you have adequate employees and premises and physical premises. So this can be met if you have directors of the company, for example. They can be treated as full-time employees as long as they have the relevant qualifications on the ground. And your registered offices or co-working space, this will fulfill the requirement of having a physical premise in the UAE. So holding companies are not required to be directed or managed in the UAE or have adequate expenditure. And as Nov has mentioned earlier, if a company undertakes any other relevant activity, or if you hold any other assets apart from shares in subsidiary, then you wouldn't be regarded as a holding company. And so you have to assess and see what kind of relevant activity that you're actually conducting, because you would not fall within this category. And therefore, if you do fall within the other relevant activity category, for example, if you hold shares in a company, but as well you receive income from IP assets, then you'll be regarded as conducting the IP business from a substance perspective, and you'll be required to fulfill the obligations for the IP business that you're conducting. So moving on. I think one area of focus here is if you are carrying out an IP business. So in the tax world, IP businesses generally, or any transactions relating to intangibles or intellectual property assets, they're area of increased scrutiny and focus by tax authorities, just because it is always easier and it's also risky, to be actually conducting these transactions. It's easier to artificially shift profits from these transactions to favorable tax jurisdictions. So this was also a way to tackle this problem. And they want to know that, hey, look, you're not just a company here in the UAE, and you're just, I wouldn't say artificially shifting profits or just generating income from these IP transactions. So that's why they have a separate category for high-risk IP businesses where more stringent requirements actually apply to them. And how do you know if you're a high-risk IP business? So there are two requirements here. First of all, if you conduct an IP business, which is you hold, exploit, or receive income from IP assets. IP assets meaning to say that you receive income such as royalties, licensing fee, you will fall within the category of an IP business. Now the next requirement would be then if all these three conditions apply. So if you see on the screen here, you see that first of all, you did not create that IP asset which it holds for the purpose of your business. You've also acquired the IP asset from a connected person, which means a party within your same group, or in consideration for funding and research and development by another person situated outside the UAE. And the third condition being that you've actually licensed or sold this IP asset to one or more connected persons, or you generate income from the IP asset as a result of activities being performed by foreign connected persons. So if you're an IP business and you actually, all these three conditions are fulfilled, then you would fall within the category of a high-risk IP business. Now, as I've mentioned earlier, if you're a high-risk IP business, then you'll actually be subject to heavier economic substance requirements. You're automatically presumed not to have met these economic substance requirements unless you demonstrate the following. So you need to show that you actually exercise a high degree of control over developing, enhancing your IP asset. You need to show that you have adequate full-time employees with the necessary qualifications that permanently reside and perform the activities in the UAE. You also need to show your business plan, you know, why you're holding this IP in the UAE, and strategic decisions regarding this whole IP assets are made in the UAE. So very important to note, you need to assess whether you fall within this category because you're automatically presumed to have not complied with the economic substance regulations unless proven otherwise. So moving on. So what if you don't comply with the regulations? Now, I think this would be of particular interest to most businesses because it involves, as you will see from the next slide, that the penalties are actually quite hefty. So if you fail to file your notification or you provide inaccurate information, you'll be fined 20,000 dirhams. And if you provide inaccurate information, you'll be subject to 50,000 dirhams. And also you would have been presumed to have failed the economic substance test for the relevant financial year. Now, if you fail to satisfy the economic substance test, or you fail to submit a report, then in your first year of failure, you would have been imposed a fine of 50,000 dirhams. And also there will be an information exchange with the foreign competent authority of your parent company, or your ultimate parent company, or your UBO. Okay, so also important again that for high-risk IP businesses, you'll be automatically presumed to have not complied with the substance test. So it's very important for you to be able to substantiate and demonstrate that you have economic substance here in the UAE. Now, in your second year, if you still fail to comply with satisfying this economic substance test, or you still fail to actually submit your report, then you'll be subject to a fine of 400,000 dirhams, and also non-financial sanctions such as having your license being suspended, withdrawn, or revoked and not renewed would also apply, and your regulatory authority may impose this. So what can you do if you've received a notification, with these penalties being imposed? Now, we've seen a number of clients already receiving notifications, actually, with the National Assessing Authority imposing penalties on our clients. Now, it is important to note that you have 3 grounds of appeal, with the first one being that you could either show that you did not commit the violation, or that the penalty was disproportionate to that violation, or the penalty exceeds the limits prescribed under the legislation. Now, the legislation isn't actually going to detail on how you can, what these grounds are, but with the third penalty, it is our expectation that, when they say exceeding the limits prescribed, it is a reference to the value of penalties. So say, for example, if you've been imposed a penalty of 800,000, that's not prescribed under legislation, and that's clearly exceeding the limits prescribed. So that would be one ground of appeal. Now, there are a lot of question marks around the actual process. The legislation doesn't actually prescribe, the timeline, the mode of submission, and the settlement of disputed penalties. And they've actually left it to the discretion of the National Assessing Authority to determine the form and the manner as to how you as a business can appeal against these penalties. But we do know, based on our limited experience with a number of clients recently, it's only been a month, less than a month actually, since the deadline has passed. But we do know on the rough calculation that this timeline, you could expect being given a timeline of 45 calendar days. And in terms of the mode of submission of the appeal, you'll be asked to actually lodge this appeal via your account on the Ministry of Finance portal. So the same account that you use to file your notifications and the reports. And then the other question mark is, do you need to actually settle the disputed penalties? Well, the legislation does not prescribe this as a condition to actually appeal against the penalties. But this remains to be seen. All right, so now you've heard on me on your main obligations as a business under the economic substance regime, and I'll hand this over to Shiraz to talk you through what you should do next.
Thank you, Janet. If you move to the next slide, please. I just wanted to focus on some of the more practical aspects in terms of what you should do. So I also wanted to wrap up, in terms of, how you're impacted and, what you need to do in the past as well as the future. So just to begin with, I mean, most of you probably have already notified your regulatory authority at the end of June. As Janet and Nof mentioned, you were required to re-notify on the Ministry of Finance portal by the end of December, and also submit your report by the end of December. This was extended to the end of January. So hopefully most of you have already done that, and that process has already been taken care of in relation to 2019. Now, if you haven't done that, obviously you should prioritize and notify and also submit the report as soon as you can. Obviously, you haven't met the deadline, and I think it's very important to take these regulations very, very seriously, because as Janet and Nof mentioned, the penalties are very, very high. In addition to the penalties, it could also have a major impact on your business operations. If your license is withdrawn, if your license is suspended, or otherwise revoked, you won't be able to carry on your operations. In addition to that, potentially the authorities here could notify authorities in foreign jurisdictions if you don't comply. So again, very, very important key message, make sure you take these regulations very, very seriously. Now, as I mentioned, in 2019, if you haven't complied with certain things, you need to make sure that you do that. Now, in terms of going forward for 2020, what you really need to do is go back to the drawing board and assess the impact of the regulations on your activities and your business and how you're affected. And that essentially involves you working out, looking at your business structure, looking at your group structure, looking at all of the entities within the group, looking at the activities they undertake and determining whether they carry on a relevant activity. And as I think as Nof alluded to earlier, sometimes you think that, okay, we're in the retail sector, how could we be carrying on a relevant activity? You could have a situation where, your core activity is not a relevant activity, but because you generate income from some other activity, and it may be a small piece of income, there's no threshold or minimum threshold in terms of, if you don't meet that threshold, you don't have to meet the requirements. So you have to make sure that you look at exactly what you do. Maybe you're providing a loan that you're unaware of, or maybe you're providing some services to a related party outside, which isn't your core business because you're in retail. But nevertheless, that may create a requirement for you to comply with these regulations. So again, it's really going back to the drawing board and analyzing what you do, whether you're carrying on a relevant activity, whether you're required to notify, and whether you're required to submit a substance report. Now, the notification in relation to 2020 is obviously due within 6 months, so by the end of June, and the report will be required to be submitted by the end of 2021. So this is in terms of the requirements. Now, a key message is, and also some practical guidance. What we've seen a lot of clients doing is they've been focusing on submitting the notification and also submitting the report and thinking that that's it, we're done. As you know, there's 3 requirements if you're subject to these regulations. You have to notify, you have to submit a report, and you also have to meet the economic substance test. And that 3rd requirement, I think a lot of companies haven't really focused on. They've just been focusing on notifying and submitting the report. And quite often they're looking at, doing this right in the last minute. So within a few weeks of the deadline, all of a sudden clients are focusing on getting the notification in and also submitting the report without paying due attention to whether they actually met the requirements. So the penalties and all the consequences which we described earlier could apply. Essentially, if you don't notify, if you don't submit a report, you provide incorrect information, or you don't meet the economic substance test. So that's key as well, to focus on whether you meet the economic substance test. So as Janet said earlier, in terms of meeting the economic substance test, you have to essentially ensure that you incur adequate expenses in the UAE, you have adequate employees, you have adequate premises, you're directed and managed here in the UAE, so all your board meetings are conducted here. You have a quorum of directors, your directors are qualified. Now, in relation to 2020, the Ministry of Finance issued some guidance that if, as a result of travel disruption or travel restrictions, your directors are unable to come to the UAE to physically meet for board meetings, then in that case, they'll relax the requirement. But it's very, very important to make sure that you document the fact that the directors were based in other countries and were unable to attend. And as a result of that, they were unable to conduct the board meeting here in the UAE. So that's very important. Or the alternative is to appoint directors who are based in the UAE for meetings which are going to happen. So again, very, very important to make sure that you meet the substance requirements, and that's largely being ignored by many, many companies. Now, in terms of going forward, again, you have to assess all your requirements, see how the regulations apply to you, and how you're impacted. And you also need to give yourself time to actually make changes. So for example, if you start the process early and don't wait to the end and proactively approach the issue, you need to essentially analyze your business structure, look at what you're doing right now. Are there any gaps? What are the requirements? What's your compliance structure right now? Are you meeting the economic substance test? And if you're not, what do you need to do? What restructuring do you need to do to your operating model? What changes do you need to make in order to comply? So that's the key message. Don't leave that to the last minute, and don't ignore the fact that you also have to meet the economic substance test and take proactive steps to literally assess what you're actually doing and whether you comply, and make any necessary changes. And don't take all the requirements at face value. So for example, if you're outsourcing certain activities, you could meet some of the economic substance requirements. For example, the expenses, assets, premises, you could meet certain requirements. Nevertheless, you have an obligation to actually manage, oversee, and have oversight over the outsourcing provider. So it's not that simple. You need to have certain controls in place in order to satisfy. So you may think that just because you've outsourced some activities, you're satisfying the economic substance regulations, but there are some requirements, and there's a burden on you to actually do things. So I think that's in terms of the substantive content. And if we move on to the next slide, Jenny. So now I'll just talk you through 2 examples in terms of how the economic substance regulations apply. So the first example deals with the financial year 2019, which is already passed now. So for the financial year 2019, the reporting period will be 1 January 2019 to 31st December 2019. And it's for this period that you actually need to demonstrate economic substance. And now, as I mentioned, for this particular year, some exceptions were made. So essentially, you were given until the end of the 31st of January 2021 to notify and submit your report. So hopefully most of you have done that already. If you haven't, you should do so as soon as possible. Now, the next example is actually financial year 2020. So let's just say your financial year starts on the 1st of April 2020 and it ends on the 31st March 2021. This will be your reportable period. So it's for this period that you have to demonstrate economic substance, and not the period before or the period after. This will be the relevant period. Now, the notification for this period is required 6 months after the end of your financial year, which works out as 30 September 2021 in this case, because the end of the financial year is 31st March 2021. In terms of the report will be required to be submitted within 12 months of the end of the financial year, so 31st March 2022. Next slide, please. So we're just going to, I know we've received a number of questions in advance of the presentation, and we've also received many questions through the Q&A facility. So we'll try to answer as many of these as possible within the time frame, and to the extent that we're unable to answer them within the time frame, we'll revert back to you via email. So I can see that we've received some questions here. So just to deal with one question, the first question is, do we need to file a notice if the economic substance regime is not applicable to our company or entity? So I'll hand over to Janet to answer this question.
Yes. So if you heard from me earlier, you only need to file a notification if you're a licensee that's carrying on a relevant activity. Now, under the previous regime, this wasn't really clear because it was actually left to the regulatory authorities to decide, okay, who should submit this notification. And some of these regulatory authorities under the old regime required all licensees to just submit this notification regardless of whether to carry on a relevant activity or not. But now this has all been clarified under the new regime, where it actually says that if you're a licensee and you carry on a relevant activity, then yes, you need to submit a notification. But if you don't undertake a relevant activity, then you don't need to submit this notification or the report.
Thank you, Janet. Another question that we've had is, does the regulation include non-profit associations, organizations? If you could answer that question, please.
Yes, so if that non-profit organization or association conducts a relevant activity, then yes, the regime does apply, and it would need to meet the requirements, as Shiraz mentioned, as in submit the notification and as well as the report if it receives any income. So if the non-profit is conducting a relevant activity, then yes, the regime will apply.
Thank you, Nof. Third question we have here is, what is the definition of foreign group company under distribution and service center business? Clearly define distribution and service center relevant activity, and also definition of group. Who has the burden of proof?
Yeah, so Karen. So I think it's important to first establish, what is the definition of a connected person, what is the definition of a group. So under the substance legislation, a connected person is an entity that is the same part of a group as the licensee. Now, what is a group then? It means that you have two or more entities that are related through either ownership or control, such that you're actually required to prepare consolidated financial statements for financial reporting purposes under your accounting standards. Okay, so bear these two definitions in mind. And so the definition of a distribution and service center business means that you're a business that carries on any of the following. So for distribution center business, you would have to be purchasing from a foreign connected person components, parts, or materials for goods, or also finished goods, and reselling such goods onto, it can be either third parties or your connected persons. So the requirement is that for distribution center businesses, you need to be purchasing all those goods from your foreign connected persons, and then you're reselling the same goods to other parties. Now, what about service center business? This is a very broadly defined term in the legislation, and it just basically says that if you're providing services to your foreign connected person, then you would fall under the category of service center business. Who has the burden of proof in this sense? Well, given that the licensee would be submitting this notification as well as the economic substance report, it is for the licensee to actually, prove its activities.
Thank you, Janet. So the next question is that, do we have to register for ultimate beneficial owners, UBOs, with any government authority? Nof, you could answer that, please.
Sure. The UBO regulations is separate from the economic substance regulations, and there is some overlap in the sense that when you file the notification and the report, you do need to provide ultimate beneficial owner details, but the requirement to file the ultimate beneficial owner details is a separate requirement, and there is a separate notification requirement for that depending on where the company is incorporated. So yes, there is an obligation to register ultimate beneficial ownership details with the government, but that is in addition to the economic substance notifications. There is a separate regulation on that.
Thank you, Nof. There's a question here on the details on the process and the updated deadlines. Janet, if I ask you to answer that, please.
Yeah, sure. Okay, so I've already covered this in the presentation earlier, but I'll just recap again. So you have 3 obligations under the economic substance regime if it applies to you. If you're a licensee or exempted licensee and you carry on a relevant activity, then you'll be required to file a substance notification. Now, this notification needs to be submitted within 6 months from the end of your financial year. Now, for your 2019 financial year, you would have already submitted that notification very recently, and the deadline has been extended to 31st January 2021. Now, for your financial year 2020, let's say, for example, your financial year ends 31st December 2020, then you would have to actually file that notification via the Ministry of Finance portal, by the end of June 2021. Now, the second obligation would be to demonstrate or satisfy the economic substance test, and this will be reflected as well, in your report that you submit via the Ministry of Finance portal, which needs to be submitted within 12 months from the end of your financial year. So again, if you generate income from your relevant activity, then you will need to submit this report. If you don't generate income from a relevant activity, then you don't need to submit this report. If you're an exempted licensee, you don't need to demonstrate economic substance and you don't need to submit this report. And I hope that's good.
Okay, thank you, Janet. So there's a question here, what would be the impact on the financial sector and what is required of the regulators? So if effectively, if a business is in the financial sector and it carries out banking activities, insurance activities, and investment fund management business, then it'll be subject to the economic substance regulations. It's not any financial activity, so you just have to make sure that the activity falls within one of the relevant activities. And just because you may be a part of a bank, you may not be conducting any of these activities. So it doesn't mean that you have to comply with the substance regulations. And in terms of the second question, which is what is required of the regulators, so due to these updated or regulations which actually replace the old regulations, essentially the role of a regulatory authority is just to collect information. So they just collect information and manage the information on behalf of the Federal Tax Authority. And the Federal Tax Authority is the one that actually enforces the regulations and checks whether you're complying with the regulations, whether you're meeting the substance test. So the responsibility to audit companies rests with the Federal Tax Authority. And the next question, will company get any clearance from authorities that notification or return is submitted, is accepted, and is considered clear? If I ask Janet to answer that, please. 8.
Yeah. Okay, so basically the National Assessing Authority, or the FTA, has up until 6 years from the end of your relevant financial year to actually assess whether you actually met the economic substance test. But this time bar of 6 years does not apply if they're the view that there was misrepresentation or fraudulent action or gross negligence on the licensee's part. And remember, if you're a high-risk IP business, then there's an automatic presumption that this economic substance test has not been satisfied unless you prove otherwise.
Next question, what will be the impact to multinational public limited companies who has one subsidiary in the UAE? There's no exemption as such for the subsidiary because it's a subsidiary of the public limited company. So you have to go back to the drawing board and ask yourself the question, are you conducting a relevant activity and earning income from that activity? If the answer is yes, if you're conducting a relevant activity and earning income from that activity, then you need to comply with these substance regulations, regardless of the fact that you're a subsidiary. And you'd obviously have to disclose details of the ultimate beneficial owner and therefore the public limited company. And the next question, does a small organization need to submit an economic substance report which has only one single office in the UAE? If I ask Nof to answer that, please.
Sure. So if this small organization conducts a relevant activity, then yes, it would still need to file a notification. And if it receives income from that relevant activity, then the report will also be required.
Okay, great. Thank you, Nof. There's another question here. Same individuals, partners in UAE company and overseas company can fall under the economic substance regulations?
Mm-hmm.
Nof, if I ask you to answer that.
Sure. So natural persons or sole proprietorships, trusts and foundations are not defined as a licensee, but partnerships with corporate shareholders and also joint ventures are considered a licensee and therefore are subject to the regime and would need to file notification for that relevant activity if it does in fact conduct a relevant activity. And if it earns income in relation to that relevant activity, then it also needs to file a report.
Thank you, Nof. The next question, are organizations without any economic substance regulations activity required to file statement declaring exemption?
So the answer to this is no. As long as you're not carrying out a relevant activity, then you don't need to file a declaration or notification, that to via the MOF portal. But it's also important as a business that you actually document this position, whether it's in terms of obtaining external advice, documenting your position on the fact that you actually don't carry out this relevant activity, you don't fall under this regime, and therefore you're not subject to the obligations under this regime.
Thank you, Janet. There's a question here, what should be expected in 2021? Of course, in 2021, as I was mentioning, you'll be required to comply with the substance regulations in relation to 2020. So you need to notify it by the end of June, and you need to submit the report in December. But before that, you need to make sure that you comply with the economic substance test, meaning that you meet all the requirements. So again, it goes back to doing a gap analysis, reviewing what your current status, are you actually compliant? And if the answer is no, then putting in place measures to make sure that you meet the economic substance test before you actually submit that report. So that's very, very critically important. Otherwise, in the same way as last year, you just need to make sure that you're compliant. And obviously in 2021, the tax authority, the federal tax authority will have had time to look at your submissions in 2019. So we could potentially expect some audit activity. So they will potentially look into your affairs to make sure that if you've complied with your obligations and everything is in order. We've already started seeing penalties being imposed under the economic substance regulations. And of course, as the authorities have more time and carry out more audits, the activity could expect to increase. So there's a question here. Our company is into trading of fasteners and hardware, also importing and selling in the UAE. Do we fall under category for ESR? Janet, if you could answer that, please.
Yeah, sure. So again, it goes back to the question, which category of the relevant activity do you actually fall under? And as that business, it's likely that the distribution and service center business would apply to the trading of fasteners and hardware. So again, we look at the definition of, whether you fall within the distribution and service center business. If your business, as a business, you're purchasing from foreign connected persons, all these component parts, materials, and finished goods, and then you resell it on whether it's to third parties or you connected persons, then yes, you fall within the relevant activity of a distribution center. Now, you could also be, for example, carrying out a distribution center business as well as a service center business. So if you're providing services to foreign connected persons, whether it's in terms of you receive management fees, or you actually provide consulting services, or even logistics services to foreign connected persons, then you would fall under this category of service center business as well. So again, it's important to assess if you fall within the relevant activities category. And if you do, then you'll be required to file notifications. If you generate income, then you'll be required to show that you satisfied the economic substance test and also submit that report.
Thanks, Janet. There's a question here. If there is no participation with relevant activities, do we need to submit yes or notification? Naf, if you could answer that, please. 21.
Sure. So if you do not conduct a relevant activity, then there is no requirement to submit a notification. A notification is only required if you do conduct a relevant activity. And yeah, so no notification is required for that.
There's a question here. Is there any issue if a company files ESR notification, although it is not applicable to it? Janet, if you could answer that, please.
Yeah, sure. Well, it depends on what was being stated on that notification. Now, if you don't actually carry out a relevant activity and you stated that you actually carry out a relevant activity, then that might create some issues or risks for your business. And you also, as you recalled earlier in the slides, that if the authorities are of the view that you provided inaccurate information, then you'll be subject to penalties as well. So if, for example, you've already submitted that notification and you've actually indicated that you don't carry out a relevant activity, we've not come across such instances, but if you do state that you don't carry out relevant activity, then it's unlikely that there should be any issues.
Just to add to what Janet said, under the previous regulations, if you were essentially, if you were carrying on a relevant activity, you had to notify. And if you weren't carrying on a relevant activity, you weren't required to notify. However, the regulatory authorities on a case-by-case basis were sort of requiring their licensees to notify, even if they weren't carrying on a relevant activity. Generally speaking, I think most of the regulatory authorities did that. So the notification you made at the end of June would have been based on the requirements of the regulatory authority. However, since then, there's been some further clarification that you don't need to notify if you're not carrying on a relevant activity. So you may have previously notified, but then not been required to notify by the end of January. There's a question here, just to get an understanding of the regulations, their impact on service business, consulting, and ensure our compliance. Janet, if you could answer that, please. Yeah,
sure. Oh, again, this goes back to the question, which relevant activity would you fall under? Now, as a consulting business, it's likely that the service center business category may apply to your business, but you have to see with that definition, it is quite broad. It just says that if you carry on providing services to a foreign connected person, then you fall within this category. Now, the key here is, are you providing services to third parties only, or are you providing services to third parties and foreign connected persons, in which case you do carry on a relevant activity, regardless of the threshold? Let's just say you don't earn much income from providing that service to your foreign connected person, but regardless, you still fall within the category if you do.
Thank you, Janet. So this deals with all the questions which were provided to us. Now we've had a number of additional questions as well. I could see quite a few of these questions are actually a repetition of what we have already, but just quickly going through them. I think there's a question here. Does a trading company purchasing goods from a foreign party and selling it to a foreign party and fall under relevant activities? And as we've discussed earlier, it depends on who the trading company is purchasing the goods from. If it's a related party, then it will fall under the distribution center activity. If it's not a related party, then the regulations won't apply and it won't be a relevant activity. There's a question here which is just similar to the question which was asked earlier, but specifically focusing on management consulting business. So if you're conducting a management consulting business and rendering services to GCC clients, is that considered a relevant activity? And as Janet said, it's not about the fact that you're just providing services. The service center activity only applies if you're providing services to a connected person. So if effectively you're providing management consulting services to clients who you're not connected with, and they have no relationship with you, and you just have a client relationship with them, then you won't fall under that relevant activity, and therefore the regulations will not apply. The next question, which I'll ask Janet to answer, if you do not conduct a relevant activity, then you are considered a licensee. Why would I still have the obligation to file a notification?
Yeah, just to clarify, under the new regime, under the new regulations, you don't have an obligation to file that notification if you don't conduct a relevant activity. Okay. Now, previously, under the old regime, depending on certain regulatory authorities, again, they previously required some regulatory authorities actually required all their licensees to file a notification regardless of whether they conducted a relevant activity or not. And we saw a lot of confusion within the businesses as well, because there was inconsistent approaches being taken. But now all that has been clarified, and only if you don't conduct, so only if you conduct a relevant activity, then you'll be considered a licensee and you'll need to file the notification. And if you generate income from the relevant activity, then you'll be required to file that report. If you don't conduct a relevant activity, then there's no need to actually file that notification.
There's a question here, does entertainment companies that provide singers, DJs, etc. fall under the ESR? The company is based in the UAE and revenue is generated from the UAE and the GCC.
Sure, I'll answer that one, yeah. Typically, no, there's no relevant activity that this would fall under. However, that doesn't mean that you should just leave your assessment there. You should, do a full assessment of the company, understand where the income is coming from. Does the company give any loans that are interest-bearing to any other entity? Does it receive any income from a foreign connected party? And if so, what activity is that income based on? Is it a service fee or anything like that? So generally no, but still do a full assessment just to understand if any other relevant activity applies.
Thanks, Nof. Yeah, it just adds to the point I was making earlier that, on the face of it, you've got an entertainment company here that's providing singers, DJs. This activity is not one of the 10 relevant activities. But should you assume that, it's not carrying on a relevant activity based on this information? No. Because it's an entertainment company, but maybe it's providing other services, which are not part of its core activity, but nevertheless, it's generating income from certain services. Maybe it's provided a loan to another group company. So therefore, you need to look at all the activities, what this is doing, what the company is doing, rather than focusing on one specific activity to determine if the regulations apply. So just the fact that you may be generating income from something else, which is a relevant activity, will make you subject to these regulations. There's a question here, does UAE offshore company has to go through with this regulation? If not, if you could answer that, please.
Sure. So offshore companies are not exempt from the regime. If an offshore company is conducting one of the relevant activities, then yes, it does need to go through the process, i.e. it needs to file a notification if it conducts one of the relevant activities, and if it receives income on that relevant activity, it needs to file the report. Okay.
If you go lower down, Daniel, please. For the year 2020, 31st December, entities, is the notification date extended to 31st December 2021 instead of June 30, 2021?
Yeah, I can answer that. So as I was mentioning earlier, if your financial year ends 31st December 2020, the notification that you need to submit to the regulatory, via the Ministry of Finance portal would be within 6 months from the end of your financial year. So that means it's 30th of June, 2021. Now, in terms of the report, that needs to be submitted within 12 months of the end of your financial year. So that means that if your financial year ends 31st December 2020, then you need to submit that report by the end of 31st December 2021.
Thank you, Janet. There's a question here. In the pandemic situation, it is not possible to conduct the board meeting in the UAE. Is it acceptable to conduct the board meeting through Zoom or MS Teams internet tools to consider the meeting as conducted as required? I think we addressed this earlier in the presentation. So there is a relaxation during the pandemic. So the Ministry of Finance have said, ordinarily, as part of the economic substance requirements, you need to make sure that your activities and your business is directed and managed here in the UAE, which means having local board meetings attended by directors locally, and also keeping the board minutes here. However, during the pandemic, they effectively accept a relaxation of these requirements. If you could, but you still need to demonstrate the fact that there were some travel restrictions. You couldn't travel in the UAE, and you need to document that. An alternative way of meeting the test is to appoint a local director, if that's possible. Jen, can you go up a little bit? So would a special purpose company incorporated in the DIFC or ADGM as part of a structured finance transaction be considered exempt in any way from filing a report? Janet, if you could answer that, please.
Yeah, sure. Again, I think without having the benefit of knowing the specifics of that transaction, again, you have to look at, what are you actually doing, or what is the company there, and do they fall within any of the relevant activities? That's number one. And then number two, did they fall within any of the category of exempt licenses that North has explained earlier? So if you do carry out a relevant activity and you don't fall within that exempt category, then you wouldn't be exempted from filing a report. But if you do actually, fall within the exempted category, then you need to file the notification, but you don't need to actually file that economic substance report.
Just to add to what Janet said, that there's no specific exemption for SPV that's effectively involved in a structured financing transaction. There's no specific exemption. So whether it's exempt or not will only be relevant if the regulations apply. So the first thing you have to look at is the SPV carrying on relevant activity. So therefore, does it fall in under as a banking activity? So we need to understand more about this particular transaction or other things that the SPV does, because it may be that as a result of some other activity which the SPV is doing, it may actually fall under the substance regime. And if it does, then we have to look at whether those general exemptions apply, because there's no specific exemption, as I said, for SPV companies. And one particular exemption may be, for example, if it's actually if it's essentially a branch in the DIFC or ADGM and is subject to tax in another country. But in this particular example, I think it's a SPV incorporated in DIFC, so that's unlikely to apply. So again, we need to do a more detailed analysis to understand the circumstances. It's not as simple as just saying, yes, you're subject or you're not subject. There's another question here. Would a company completely owned by Emiratis fall under the exemption category? If I give that one to you, Nov, please.
Sure. So yes, if the company is not part of a multinational group and its business is conducted within the UAE, then it would not fall under. I mean, it would not be subject to the regime and would fall under the exemption category.
Thanks, Nov. There's a question here. Does management consultancies and IT consultancies come under the service center whose most of the clients are outside UAE origin?
Yeah, so as we've explained earlier, the key to determining whether you fall under this service center business is, the question is, do you actually provide the services to your foreign connected persons? If your clients are just third parties, then you won't fall within the service center category. But again, it's also important to, take a step back and actually look at, all your activities as a whole and see whether you fall within, other relevant activities as well.
There's a question here: if we are complying with all FTA requirements, submitting our taxes and audit on time and with the relevant parties, and are including all our activities, what else do we need to do specifically for 2019? So the FTA is obviously the Federal Tax Authority, and in the UAE, the Federal Tax Authority is responsible for the collection of taxes, for enforcing taxes, and also for managing the tax system generally, and now also enforcing the economic substance rules as well. So the economic substance rules are separate to all the other tax requirements under the VAT legislation and also the excise tax legislation. So it's completely separate, although the authority which is enforcing them is the same. So just because you've complied with your tax requirements with the Federal Tax Authority, meaning that you've registered for VAT, you've submitted your returns, you've met all the other obligations, and similarly for excise tax, it doesn't mean you satisfy the substance regulations. So substance regulations, as we've mentioned, have specific requirements. If you're subject to these regulations, you have to notify, meet the economic substance test, and you have to submit the report. And that's regardless of whether you're registered for tax or not, and whether you've complied with your obligations for tax. The next question. As a consequence of the issuance of new economic substance regulations in August, filings done back in June under the old system are expected to be disregarded. As such, no further action should be required for. Please correct me if my understanding is wrong.
Yeah, sure. So the notifications that were done back in June with your licensing authority need to be resubmitted via the Ministry of Finance portal. So you do need to resubmit if a notification was submitted already. And the notification should match the submission that was done back in June. So you do need to resubmit.
Just to add to that, in June, there was no reports required to be submitted. So it was just the notification. And as Nof said, you're now required to, you should have already resubmitted the notification by the end of January, as well as submitted the economic substance report. So there's a question here. You mentioned the oversight of outsourcing activities. How should such oversight be operationalized ideally? Any practical example? It's a good question. I mean, I guess the key aspect is to make sure that you document everything, because you are expected to have oversight, and practically speaking, I think it'd be very, very difficult to achieve. If you're having that level of oversight, you have to effectively dedicate resources. And the standard, from what I recall, is very, very high in terms of making sure that the expenses are being incurred. Because effectively, the outsourcing party has to meet the substance requirements for you in terms of expenses, assets, and premises. And you have to oversee that. So you have to monitor the expenses, you have to monitor their assets. And I don't know to what extent they feel comfortable. So whilst in theory, obviously if you outsource something, and you're trying to meet the substance requirements through that route, it may sound like an easier route, but there is further work to be done. And obviously you have to discuss that with the outsourcing provider, and then document that arrangement, and also document the fact that you actually entered in an arrangement and you do have oversight. Because that's probably a question which may come up during the audit. So there's a question here. Our client has a flexi desk with one employee. Does it fulfill economic substance tests? Nof, could you answer that, please?
Mm-hmm. So this really depends on your activity, your licensed business activity, and also your relevant activity, and whether it is adequate. There isn't a minimum threshold. So a flexi desk is sufficient to meet your licensing requirements. But if you are, a general trading company or distribution center, that it might seem inadequate to have a flexi desk, then it might be problematic. But yeah, so it does depend on your activity and what you're actually doing to see if one employee and a flexi desk is adequate.
As we mentioned earlier, the regulations tell you that you should have adequate employees, they should be qualified, but it doesn't really go into the detail of what adequate actually means. So it is down to your discretion, as well as Nov said, it depends on your activities. So clearly, if you're a trading company and you've got flexi desk, that's not sufficient. The question here doesn't really specify what the actual activities are and what actually is happening in the UAE. So we can't answer that more specifically, unfortunately. It really depends on your activity. So it's possible for some businesses, a flexi desk is fine, whereas other businesses, it won't be sufficient. It's on a case-by-case basis. You, of course, have to use your business judgment and literally analyze the whole situation. And again, it highlights the fact that, you really need to review your activities, what you're actually doing, because only then can you determine whether you're in a position and you're compliant. And whether you need to take any measures to implement any measures to rectify any non-compliance. There's a question here. Can you please re-explain the definition of foreign connected persons, Janet? If you...
Yeah, sure. So again, breaking this term down, we have to look at the definitions of a connected person firstly. And now, a connection person is defined as an entity that's part of the same group as the licensee. Now, what is a group? A group means two or more entities that are related through either ownership or control, such that, you're required to actually prepare consolidated financial statements for reporting purposes under accounting standards. So basically, putting all this together, foreign connected person is basically a related party that belongs to the same group as your business and is situated outside the UAE.
Thank you, Janet. There's a question here. Being a finance manager, I've submitted our 4 companies' notifications, but the user ID creation on the Ministry of Finance site is for this purpose was not strictly for an authorized person. What if one day a notice comes from the ministry stating that a notification is not submitted? Either of you, Janet?
Yeah, sure. So basically the user ID creation, it requires you to put in the your email address and also your login credentials. So these credentials are actually used for communication purposes, and all those notifications from the Ministry of Finance would then just go to this email address. So it's also important to keep a lookout for such emails from the Ministry of Finance, just to deal with any questions that may come in, or even notices on the non-submission of the notifications. And also, we've seen this quite a bit that notifications from government authorities as well. They could be accidentally, inadvertently directed to your junk mail or spam folder. So it's important to also have controls internally within your business and to put, such notifications from authorities on the whitelist, just to avoid, missing out on these notifications.
So, thank you, Janet. If you just move down, please. There's a question here, are all companies in the UAE required to register or submit ESR? I think we've already covered this in our presentation. Not all companies, not all licenses are required, only those that are carrying on a relevant activity. There's a question here. We have 3 entities in the UAE, holding in RAC, branch or foreign entity in Abu Dhabi, and 1 more in the DMCC. All hold activities as insurance and reinsurance brokerage. Can you give clarification if the holding company falls under relevant activities? So again, whether or not it's regarded as a holding company and therefore is carrying on a relevant activity, depends on whether it meets the definition of a holding company. And as Nof explained earlier, a holding company is one that generates income only from dividends or capital gains. So if you consider it as a holding company and is carrying on any other activity or generating income from anything else, then it will not be considered as a holding company. It has to be, in effect, a pure holding company. So 100% of its activities have to be focused on holding. And that always happens when you receive, the only income you receive is dividends and capital gains from the sale of your shareholdings. There's a question here. Can you clarify who the ultimate beneficial owner is when the company is having many tier of holdings? Nof, if I could pass that to you, please.
Sure, yes. So the ultimate beneficial owner is the entity, or in most cases, natural person who is right at the top of the entire structure. So you need to go through all the layers from the immediate shareholder to the shareholder above that and above that until you reach the ultimate beneficial owner. There is a definition, and typically it's a natural person who either directly or indirectly owns or controls at least 25% in the UAE entity. So you'll need to go through each layer, and depending on where your business is incorporated or established, you will need to meet those filing requirements. Some authorities require the entire layer structure to be evident, and some authorities just require the details of the ultimate beneficial owner to be recorded.
Thanks, Nof. There's a question here. Suppose both the entities are existing in the UAE, do we need to file a notification? It's not about whether the entities are in the UAE. Again, it depends on what they're doing. Is it a relevant activity? And therefore, do they fall subject to the regulations? So that detail is not provided in the question, but hopefully with the information we've given you, you'll be in a better position to determine. And of course, we'll be happy to answer your question by email also. There's a question here, my company is not relevant. What is my next step? I'm assuming that question means that your company is not carrying on a relevant activity. And if that's the case, there's no next step. You simply have to do nothing because the regulations don't apply to you. You're not required to notify. You're not required to submit any report or otherwise maintain economic substance. And again, the idea is of the economic substance regulations. The objective is that if you're carrying on certain activities, and these activities are essentially activities which trigger the movement of profits. So that's really the focus of these economic substance regulations. It's not any activity. And typically, the activities which trigger the shifting of profits from high tax countries into low tax countries, essentially, you could manipulate your profits in such a way if you're related. So if you have a group of companies, if the companies are related, you're more likely to do that. And hence the focus of these activities is having that relationship, being controlled person and being connected. There's a question here. If the licensee does not have IP asset, but it earns from the development of content from foreign connected persons, however, the same is not recognized as an asset in the balance sheet, whether this income will be classified under IP business. Janet, if you could answer that, please.
Yeah, sure. So again, we have to actually look at the substance of the transaction. So it's just not the case of looking at your financials and seeing how this income is being recorded or how this IP asset is being recorded. But the question is, do you exploit, do you actually receive income, a separately identifiable income from this IP asset? And IP asset is defined as royalties, or if you license your IP. If you fall within this definition, then yes, you'll be considered as carrying on an IP business. And then also this begs the next question. You need to carefully assess and see whether you are considered a high-risk IP businesses based on the 3 conditions that I've outlined earlier in the presentation.
Sure, if you go lower down. The question here, also the branch in the UAE receives funds related to business to headquarter in other countries. Would this be considered as a risk? The question is not very clear, but if you have a branch here in the UAE and essentially the branch is carrying on a business as a headquarter and it's receiving income from that headquarter business, obviously the headquarter business is actually a relevant activity. So therefore you'd be required to notify. And if you receive income from that headquartered activity as well, then in that case, you would also need to submit a report and also meet the economic substance test. So next question. There's a question, a definition of foreign connected person. How does the FDA, DED determine that foreign supplier customer is a connected party, and who needs to prove the relationship? I mean, in terms of whether you're a foreign connected person, that's defined. That's defined under the regulations. So that's how the authority will look at the definition in the regulations and determine whether you have that relationship of connected party. In terms of proving the relationship, of course, you have to have all the documents in place. The onus is on you to have the documents in place. The tax authority could ask for any documents they require in order to demonstrate that you guys are not connected parties or otherwise. Therefore, the onus is on you. Okay, so if you go lower down, please. Is it possible to make an inquiry with the FTA on whether a particular business is conducting a relevant activity? That's a good question. Obviously, the Federal Tax Authority is the enforcement authority, and whilst it's been set up for quite some time now, and it manages and administers VAT and excise tax, in terms of the substance regulations, the responsibility was recently given to them. So I think it will take them some time to develop resources in this regard. And obviously the tax authority's role is there as an enforcement authority. They check whether you complied or not. Technically speaking, they're not required to advise you. So many people, even for VAT and excise tax, they think they could call the tax authority and get advice from them. And the tax authority's primary role is to make sure that you comply, not to advise you whether you comply or not. So generally speaking, tax authorities everywhere across the globe, they have very limited resources. So they're not able to dedicate resources to advising clients. And companies are expected to obtain their own advice and understand the rules and how they apply to them. Of course, from time to time, they may issue general guidance, but in terms of getting specific guidance, I don't think you'd be able to get that from the tax authority, based on our experience. The next question. There's a question. You mentioned small organizations fall under the regime. When exemptions, it mentions company by UAE residents only carry business in the UAE are exempted. How does this work? Nof, if you could answer that, please.
Yeah, sure. So generally, it applies to every organization that conducts a relevant activity, whether it's small or not. But if you do meet the definition of an exempted licensee by being wholly owned by UAE residents and not part of a multinational group, and only carries out the relevant activity in the UAE, then it will be considered an exempt licensee. So you need to assess them separately and see whether you're exempt on that basis.
Thank you, Nof. I think we've gone over our time, and we've allowed you additional 10 minutes to answer your questions. To the extent that we haven't answered any questions, we'll get back to you. Now I'll pass you on to Fatima, who will conclude the presentation. Thank you, everyone.
Thank you.
Our sincere thanks to Al-Tamimi and company for their time this morning to share insights on key aspects of economic substance regulations. Thank you all for joining us this morning. Please do take a minute to fill out the survey, which will come up on your screen as soon as we end this webinar. We wish you good health. Have a wonderful week. Thank you.